Welcome to World Finance Update. Today is Sunday, January 4th, 2026, and in this video, we're breaking down how the markets positioned over the weekend, what moved last week, and what investors should watch for when trading resumes on Monday. Yellow. Market performance last week. Recap. Let's start with a quick recap of what happened across global markets as trading activity began in 2026. Last week, U.S. markets opened the year with modest gains across major indexes. The Dow Jones Industrial Average rose around 0.66%, while the S&P 500 added roughly 0.2%. Meanwhile, the Nasdaq 100 was slightly lower as several large technology names paused after a strong 2025 performance. This early action reflected a balance between positive economic growth data and rising bond yields, with investors weighing stronger fundamentals against persistent macro risks. Yellow. Dollar and FX sentiment. At the start of 2026, the U.S. dollar has shown signs of renewed firmness, with the dollar index rising modestly as investors recalibrated expectations after a challenging 2025. This recovery suggests market participants are now refocusing on fundamentals, monetary policy expectations, and upcoming U.S. macro data, rather than sentiment-led flows alone. Major currencies such as the euro and British pound were slightly weaker against the dollar, while some Asian currencies also experienced subdued movement this week. Yellow. Equity and sector insights. Equity markets globally remain generally constructive as we begin 2026. U.S. stocks saw mixed sector performance, with tech and AI names continuing to attract interest, while some defensive stocks lagged. Energy and oil prices were modestly higher, reflecting supply dynamics and geopolitical developments affecting expectations. Gold and other safe havens eased slightly as risk sentiment stabilized, but remain relevant ahead of key data. Meanwhile, Bitcoin and crypto markets hovered near $90,000, indicating continued risk appetite among digital asset traders, even as macro uncertainty remains elevated. Yellow. Geopolitical risks and weekend events. Over the weekend, geopolitical developments have injected additional uncertainty into global markets. Notably, events surrounding Venezuela's political situation have put oil markets and broader risk sentiment on edge, which could translate into volatility when markets reopen on Monday. This kind of risk premium is especially important for traders and macro investors because oil markets often react before equities and currencies do in periods of heightened geopolitical tension. Yellow. What to watch on Monday. Market outlook. As markets prepare to resume trading on Monday, January 5th, 2026, here are the key factors investors will watch closely. Pen emoji. Number 1. U.S. jobs and inflation data. Early January economic releases, including employment and inflation figures, are expected to provide fresh guidance on Federal Reserve's policy direction. Pin emoji. Number 2. Fed policy signals. Analysts remain focused on the Fed's stance, especially with leadership transitions and rate expectations shaping up for 2026. Pin emoji. Number 3. Earnings and sector momentum. Corporate earnings updates, particularly from tech and AI sectors, could influence investor confidence and rotation into growth or defensive areas. Pen emoji. Number 4. Geopolitical and commodity signals. Oil prices and risk assets may react early in the session to geopolitical developments that unfolded over the weekend. Green circle. Conclusion. Markets began 2026 on cautious optimism, with equities modestly higher and the dollar finding renewed strength. FX sentiment is mixed, influenced by both macro trends and policy expectations. Geopolitical developments over the weekend may shape early week volatility. Monday's trading session will be crucial for setting momentum in the first full week of 2026. This has been your World Finance Update, bringing you professional, data-driven insights into global capital markets and what lies ahead. Disclaimer: educational purposes only, not financial advice.